common things that we're always running into here in the real estate industry is the concept of mortgage rates. Because I know people hear things about the interest rate, and there is the interest rate on mortgages. Your mortgage rate is the interest rate. Those aren't necessarily, when you talk about like the Fed and the national interest rate, that's not necessarily exactly the same thing. The mortgage rate is the interest rate, though, that will be charged on a loan. But there's a lot of factors that go into determining exactly what that is and understanding the entire concept of your mortgage rate. So we're going to call this Mortgage Rates 101. Probably going to break into a couple different parts because this is going to be pretty long. So this is Mortgage Rates 101 Part 1. We'll come back with Part 2 in the next week or so. So first things first, when you're looking at your mortgage rates, there are a lot of things that are going to go into it. One of the primary things that we used to focus in on, not so much anymore, was a fixed interest rate versus an ARM or an adjustable rate. If you go with an adjustable rate, your initial rate will likely be lower, but it's also subject to going up in the future. So you're certainly going to want to talk to a lender about that. Most commonly, though, people are going to go with a fixed rate. An adjustable rate might make sense for you depending on that time period before the rates start to go up. If you decide that you're likely to sell that home within 5 years, it might make some sense to lock into a lower adjustable rate because the rate won't start going up if it does go up until after that initial 5-year period. So definitely talk to your lender about that. Now, there are a couple of different factors that go into your mortgage rate. Economic conditions are certainly going to be part of it. Your credit score is going to be a large role. Your loan type, FHA, VA, conventional, your down payment amount, because if you're below 20%, you might very well have an additional fee added on, which is called PMI, which is private mortgage insurance, because the loan is seen as riskier with a lower down payment amount. So these are all things that go into your interest rate. So when you see stuff online about the interest rate or the mortgage rate or all these things, keep in mind that that doesn't necessarily mean that will be your rate. So there's a lot of factors to keep in mind. So that just gets you going to understanding some of the basic concepts of the mortgage rate.